Hello, everybody. Happy Tuesday. So I got some emails, of course, on the QT from some folks asking why I'm day trading options, or at least I had been. And so you have to think about my mindset, right? My mindset is if I don't make money, I'm not getting paid. So if the market isn't amenable to like my main personality, so to speak, do I sit out what could be long stretches of time, or do I participate in another way, although suboptimal, but still in a way that has positive expected value, still in a way that focuses on risk management, i.e., don't lose, because if you don't lose, or if you lose small bits, you don't have to earn that much back to get back to a previous high, and continue your quest to manage risk in a professional manner, right? Pro bono means better than what the retail, trading enthusiasts can do, trading the micro e-minis with a $5,000 account. I mean, I don't know what to tell you on that. To me, it's like, I don't think it should come as a shock. You don't think I'm sitting here standing still, right? The reason why I might have haters is because I'm constantly challenging myself to try new things and to do better. Most people don't like to do that because they don't like to suffer any humility. They don't like what failure looks like, not just to how they feel about it themselves, but what are other people going to think? Where that to me is where life gets exciting, is growing as a person, right? There's a saying, and I'll try to remember who said it, but ultimately I feel like I've been given lots of gifts, especially as like a personality type, and so I feel like it's my duty to kind of respect God and the universe to try to use all those skills to the best of my ability. It's never a question of what it looks like. That's irrelevant. I'm not a person who cares what it looks like. Nor, generally speaking, I'm happy to get the accolades here, but I do this show for me. The fact that anyone gets anything from it is kind of incidental, right? This is my way of having a full karma bank. That's why I don't care about having whatever number of 2,000, 1,800, whatever subscribers. It's not a vanity. I could very easily take tens of thousands of dollars and hire a PR firm, a media relations firm, get on TV, and to start to promote myself and have those numbers grow parabolically, probably overnight. But it's just not my paradigm. Like, it's not something that I care about. My goal is to give it back to the community, and I know that the good karma is going to come back to me. I don't know where it's coming from, but I know it's coming. That's just happened too many times in my life for me to doubt that, to doubt the abundance. So that anyone can see the show, it's for free. It's available whenever you're ready. You know what I mean? What I do know, generally speaking, is that if you don't engage or you're afraid to take chances, you're not going to get anywhere in life. That seems like a bold statement, but think about risk and reward. You don't get reward if you don't take the risk. So that's why I've said almost famously anymore is like, we don't get paid to know stuff. You don't get paid for that. You get paid to take chances. So somewhere in the calculus of everything, you've got to learn to grow a pair and to take chances, try new stuff. And it's true, when I started, I came in full of piss and vinegar, knowing that I wanted to change my life and go from blue collar to white collar. First thing you do is you take blue collar ideas and apply it to a white collar job. I'm working long days. And you find out that on any 9-hour shift, you're getting 5 hours of quality work. So that's kind of stupid, but you don't know any better. I didn't. So then you got to back off. So then you learn to work hard, for sure, which, like I said, my sister and I had that no problem because of our upbringing and the environment that we were in. But then you have to learn how to navigate things very smartly. And then, so that you optimize and you're efficient. So once I cut away the things that weren't working, interbank foreign exchange, options, I was profitable with equities. But again, when stocks traded in eighths and they had a quarter spread, you're looking at needing to make 3/8 to a half, or 50 cents for those of you who are into decimalization, in order to get to a break even. And so trading short term was super expensive on a whole bunch of levels, because there was really no getting around it. So I had to think longer term. Then, because again, like most of you starting out, I didn't have all the money in the world. What I did have at the time had come from sweat equity from an earlier part in my life. And so I thought if I used leverage, that can help amplify things, which it eventually did. But then once I figured out who I was, what was my voice as a trader, right? People think about authors like, what's the author's voice? What are my as an artist and as a painter, what are my gestural marks that would, you could look at and see a painting and be, that's Martin. The same way you would look at like a print from Andy Warhol and know that, it's him, or something by Kenny Scharf, all the guys from the 80s that I kind of grew up admiring and seeing out in the city quite a bit. Kenny Scharf, Andy Warhol, Jean-Michel Basquiat, and of course Keith Haring. If you see something by Keith, it's probably his, right? So we call that your voice. What are your gestural marks? What is your voice? Once I developed that as a trader and I sunk my teeth into that and I really, built it up and kind of built, it's not like you have a reputation, but you have a certain type of a know-how. Now I had confidence as a man to focus on that, to keep executing. But then I also had the time to go back and say, okay, I was kind of onto something with the equities. Let me go back and see where I can see there's similarities between, equity markets and commodities. There are some similarities, but that's just really in terms of bids and asks and this and that. They're completely different markets. Capital markets versus commodity markets. Commodity markets are insurance markets. So they're very different. They behave differently. There's different participants there. There's an enormous amount of so much math and science now that the term speculator is really obsolete anymore. I don't know anyone who's just rolling the dice thinking like, oh, we're going to buy stuff. There are lots of misconceptions too, like, well, there's no asset. Well, of course, that's a truism. The asset is the risk premia attached to the instrument that you're underwriting the risk for when you engage in a futures contract. While we're at it, the cash market is what drives futures, not the other way around. You'll hear politicians, you can see who studied art history and gender studies, besides maybe getting a law degree, when you hear people talking about speculators pushing the market around. While it's true, a big order hitting the floor of an exchange can shift by a fraction of a cent the commodities futures markets. There's nothing that's going to happen at NYMEX that's going to dictate to OPEC how to price their oil, aside from it being on the front page of the newspaper saying we're cutting supply because we need prices higher. You know what I mean? Like, people, there's a special kind of stupid for people who don't listen or just want to toe the party line. Anyway, back to the show. So I eventually got back to understanding, options and how they worked and the dynamic. And then, of course, I had to put money to work, because the only way you can fully understand it and feel how it feels, just like getting it on with your girlfriend, you can read all the books, you can watch all the porn you want, but until you're in the sack, you don't know anything. And likewise, so you have to put a few trades on, see what it feels like. What does it feel like to go directionally long? What is it like, and have a debit balance? What is it like to sell a contract short, right? What's it like to do options on futures, which again behave differently, but somewhat similarly to equities, right? For one, in the future space, just to give you a heads up, there is no standardized sizes. Whereas, you're looking at your equities, everything is usually based on 100 shares. That's not the case in futures. So you have to learn that lesson, sometimes painfully. So I filled in the spots. And then how does it apply to today? Why do I do it? Well, again, if you look at the volatility, sometimes I'm not a big trader in the pre-market. I have been known to offset things or to add to positions if positions started to break after the close of the outcry session and you watch things overnight. I've done that. I haven't done a lot in the mornings, done a lot after the close and in the evenings based on what's happening in, like, say, Sydney or Tokyo, Hong Kong, London, this and that. Because again, I'm in Los Angeles, so with the time frame, the folks in New York fast asleep. It might be 1, 2, 3 in the morning Eastern, 1, 2, 3 a.m. Eastern time. Is worst case, it's like 11 p.m. midnight my time, which is still kind of getting a little bit late when you get up at 5. You're like, you feel it the next day. But then you've got position sizing, right? Because the delta when you're long or short, you say 10,000 shares of a stock, your delta's 1, right? So you're dollar for dollar, right? So you have to have a hard stop. When you have an option, there's a little bit of give and take on it because your delta might be 50, 60, right? So you can position size to get it right. Then you got the benefit of the delta to help, because you're not moving dollar for dollar. So you have a little bit more staying power. I like to take risk home overnight over the weekends. But what I don't like is when you see some of these names up $5, $10 before the market even opens, right? That's a whole other type of trade. So you're like, you don't want to miss the move, but you also don't want to chase. So how do you do that? You have to find a technique that works for you, that will keep you in the game, position size it the right way, and you have to adapt, right? That's the world that we live in these days. So much is happening, before the open that, you got to be super careful. So what's the best way to do that? Well, trade super small, know how much you're willing to risk. And then, in certain circumstances, it might make sense to trade debit spreads or, like I said, know what your max loss is coming into a trade, before you even put the trade on. Because with stops, you might find that you have a $1 stop on something that you're taking home overnight, and it could be down $2 in the pre-market just because there's no liquidity. And someone decided to get out of a position and they had a lot of inventory to move. But you don't know the reasons why someone's selling. All you know is that the name has moved against you and the price is now beyond your stop. And if your stop wasn't in good till cancel and marked for all sessions, you might now, be in a loss that's larger than you had anticipated. That could affect you emotionally. And when you're in that type of an emotional state, I promise you're not going to really be trading at your best. So you have to adapt and adopt new strategies, new techniques, which you can do over time. Having said that, I'll wrap it up by saying at the beginning, you really should focus on one thing. And I'm going to leave it with that. Tomorrow I'll be here with Ganja and I'll talk to you a little bit about that. The plan is to move to a bona fide kind of production studio where the things that might drive you crazy that I don't really care about. Good example is like what's on the wall. Don't give a shit about what's on the wall. If you're worried about what's on the wall, you're missing the point of the show. 2, I'm not that fussy about the lighting. It's, because I have to find pockets of time when I can actually record the show. Sometimes it's overcast. Sometimes it's in the evening. Sometimes I have a small break in the action around lunchtime. So I'm trying to get the show done. Lighting's going to be inconsistent. But if you're worried about the lighting, it might drive you nuts. But at the end of the day, to me, you're kind of missing the point of the show. But we will have more of a professional kind of studio situation happening in the next month or so that we'll be able to set up and have our own studio. So everything will be set up for us where we just have to come in and crank. And then we might do some, more live, for example, live stuff that you can be invited to. Might have a few guests here and there. I'm not looking for guests, so please don't say that you want to be on the show. I have more people that I've known over the course of my life who I know would be a good fit for the audience. And until I exhaust that list, which isn't going to be anytime soon, I'm not really looking for PR people saying, you ought to have so-and-so, which I know they're just blasting spam emails. But anyway, I'll be here tomorrow with Ganja. Everyone likes him. He's a great guy. And please like and subscribe. Tell me what you think. Ask all the questions that you want. If I have anything to say that's halfway intelligent that I think can help you, I'll be happy to answer those questions for you live. And then I'll be back Thursday and Friday, just myself, to finish up the rest of the week. Thanks for being here, folks. I'll see you tomorrow with Ganja. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.